saying in SS is that manufacturing account goes beyond preparing trading profit and loss account. And we know we have a manufacturing organization, likewise you have a trading organization. So the account that will be prepared by the manufacturer will be quite a little bit different from trading, because manufacturing organization will account for the cost that was incurred in the production, which is the cost of production. So it is the cost of production that will be transferred to the trading profit and loss account and balance sheet as at that date. So that's why a manufacturing account is a little bit different from trading account. And we know what brings about manufacturing is when it is an organization that transfer goods, raw materials into finished goods. So the raw materials, the cost that they incur in making the goods into the finished state, they have to account for it and transfer it to the trading account at the end of the day. Now, what are the items of manufacturing account? I mean, terminologies are some items that you can come across when you are preparing manufacturing account. Number one, we have prime cost. Prime cost, these are expenditure which can be charged directly to a particular unit. And when we are talking, it is a kind of cost that you can easily trace to the manufacturer. You know, we have an indirect cost and you have a direct cost. But prime cost, they are the direct cost that you can easily trace to the unit particular of a product or of a particular finished good. And under the prime cost, what make up prime cost is the direct labor, direct expenses, and the direct material, of which we will take them one after the other. Number one, we have direct materials. What is direct materials? These are the materials which can be traced directly to every unit of the product. E.g., we have flours for bread. Anything that you put into the business, into a production that produce a finished good is what we call raw material. And you can use the typical example of flour. Flour, when you take flour into processes, it becomes bread at the end of the day. And we have so many materials which make goods to be in the finished state. Now, we're talking about direct labor. When we're talking about direct labor, this is about the cost of labor service, which are easily and direct traceable to the creation of production. And when we're talking about direct labor, they are the labors that operate the machine, that you can easily trace their cost into the manufacture of a product. E.g., we have wages of operator. We have other labor that you can easily trace them, that they are the one that help in transforming the goods into finished state. Now we have direct expenses. These are expenses. They are those costs that do not relate directly to materials or labor, but are incurred specifically on the particular product or on every unit produced. E.g., we have royalty franchise. So this directly that we are talking about is that another additional expenses that was incurred in the production of raw material that you can easily trace, and one of them is royalty. So the three together makes what we call prime cost. Now we'll be talking about factory overhead, and that is a very important. Another name for factory overhead is production overhead. Here in factory overhead, you know, as a manufacturing organization, we have a production department whereby they produce goods, they bring them to they undergo processes before they become finished goods. So the expenses that was incurred in the factory is what we call factory overhead. And what are the expenses? These are costs necessary for production, which are directly traceable to a specific quantity of physical units. And what are the factory wages that you can come across when you are preparing manufacturing account? We have factory, we have depreciation, we have fuel, we have indirect wages, we have indirect rate, indirect rent, and the like. So that is that about the factory overhead. Then we'll be talking about work in progress. Work in progress consists of partly finished or work not yet complete. There are some raw materials that have been input in the production, of which they are partly finished but they are not yet complete to become finished good. So it's also one of the items that we consider in order to accumulate the cost of production at the end of the day. Then we'll be talking about non-manufacturing costs. You know, in the trading profit and loss account, we talk about different types of expenses, but under manufacturing, they are classified into different expenses. We know we list them just like that, but in manufacturing, we call them indirect expenses that cannot be traceable. Those are the non-manufacturing costs, are the costs that cannot be that are indirect, that cannot be traceable to the particular unit of the product. Under it, we have the selling expenses. Examples of selling expenses is we have commission of salesman, we have advertising. Those are related to selling expenses. Then we have distribution expenses, like the expenses that they incur when they are packing goods, when they are offloading, when they are loading and offloading, when they are distributing it to their different destinations and to the customers who need those goods. So the expenses incurred are distribution expenses. Here we have carriage outward, we have packing materials, and so on. Now we're talking about administrative expenses. We are talking about admin. There are some admin expenses that they incur. So though they are cannot be traceable, but they are also part of expenses which also help in the manufacturing account. And we have anything like office rent, rate, lighting, insurance, salary. They are classified under administration expenses. Now, what are the formats? You know, when you prepare manufacturing account, you prepare trading profit and loss account for that year, and you prepare balance sheet as at that date. So this is how the format of manufacturing look like. The first one is the opening stock of raw materials. You add purchases, add the carriage inward of strictly raw material. Because the reason why we are preparing manufacturing only is to know the cost of production at the end of the day. And you left the closing stock of only raw materials. Then after that, you have a cost of raw material consumed. Then you have a direct wages, direct labor, direct expenses, royalty, exercise duty, copyright, which are classified as the prime cost. That means, and we talk about prime cost. Prime cost is direct materials, direct wages, and direct expenses is what comes about, and you can take it as a prime cost. So here we have the prime cost at the end of the day. Now we go along to put items under factory overhead. You know, I discussed about factory overhead that any expenses that is incurred in the factory, we call them factory overhead at the end of the day. That is why we have a factory rent and rate, indirect expenses, direct labor, depreciation on plant. You know, depreciation is used in the factory. So we have repair of plant. Any items that relate to factory overhead will be put under factory overhead. So after that, you had your opening work in progress, then you left closing work in progress. That is then you have your cost of production at the end of the day. So, and the reason why we are preparing manufacturing account is to get the cost of production. You know, when you get the cost of production, that is then you decide on the selling price. Like, let's say for example, if the cost of production of one unit is 15 naira, that means it tells you to take decision on pricing, how to price these goods. That means if the cost of production of the unit is 15 naira, that means it's supposed to go for 17 naira. You sell it for 17 naira at the end of the day. So that's why we are preparing a manufacturing account. Now, after that, then you now prepare trading account, where we have opening stock of that finished good that it has been produced. Then you have for cost of production, you have purchases of finished goods, and that's why you have a gross profit at the end of the day. And after that, then you transfer the gross profit down to the credit side of the profit and loss. That is then you begin to classify those expenses, selling expenses, which are discount allowed, bad debt, salaries of salesman, commission, and then we have administrative expenses, which are office rent, insurance, salary, depreciation, and the distribution expenses, which are classified as carriage outward, packing materials, lighting of warehouse, and so on. And that is why you have your net profit at the end of the day. Now we'll go to balance sheet. It's the same procedure used in preparing balance sheet for trading. That is also